Hey guys, welcome to the second update on YouTube. And as promised, I wanted to post a recording of the session I had yesterday in which I elaborate the framework we're currently in. But the sound quality is not that good, so I'm going to do a new voiceover over what Richard yesterday posted in the group and to give out the whole framework. So basically, I got a lot of questions to give some elaboration about the current situation. So that's what we're going to do because it's important that you guys know that times like these, when things are uncertain, are the times you need to invest your money into the market instead of wait until we reach a certain price targets or wait until we hit 50K once again. Because the return on investment that you can make right now is so much higher than if you wait and don't act because you're fearful or whatever. And that's why the framework has been put out. And I will elaborate on the current market situation and tell you what is going on. So first things first, and everything starts with a system that is failing, right? So we have a current monetary system that is failing, and I wanted to point out the following thing. Look at this example, and you see the U.S. national debt clock. You see currently 30 trillion in debt. What you keep in mind is 30 trillion. The 30 trillion will never be repaid ever. So what you're looking for is an alternative so you can gradually step over from the one system to the other system. Right now, the best alternative we got is cryptocurrencies. So we have a monetary system that is failing, and you can see that if you compare the value of uh, DXY, so the dollar, compared to the Bitcoin, for example, and you see that it already lost 99% of its value. So money is becoming very invaluable, and that is the thing. That's a big thing, and especially if you want to get rich or at least build your portfolio value over time. And what you need to do is buy assets. You can buy gold, you can buy houses, you can buy stocks, you can buy whatever you want. But as you can see in the chart over here, the S&P 500, for example, is into a parabolic run, and that parabolic run is based on stocks becoming more expensive. So by on the one hand you have your purchasing power declining with the dollar devaluating, and on the other hand you have the assets that you need to buy to build your portfolio are getting more expensive. Look at the housing market is exploding the past couple of years, and the S&P 500 as well. So less and less people are able to buy any value creating assets today. And that's a problem, especially for the middle class. And if you zoom into that a bit more, then you see that the real story is a bit different because we have a asset class that is rising based on people thinking that all the stimulus checks are being put in to the stock market, for example, and that's why the prices are rising. But if you zoom into the stock market itself, so for example, if we go to the S&P and you zoom into the weekly time frame, and you see already I pointed out, but you can see the asset classes increasing, but the volume is actually decreasing. So nobody's actually putting more money into the market since 2008. If we want to see a parabolic uprun, the volume needed to be rising. Right now it's declining. So basically saying, how come the price is rising when there is no new buying power or not extraordinary buying power like we should be seeing in a parabolic uprun with the S&P, with the real estate market as well, with everything. With the Amsterdam Stock Exchange, you see the same thing. Don't see the buying power over here, but you see all the asset classes into a parabolic uprun. And the uprun is not based on more buying power, but it's based on a devaluating dollar. And the dollar is becoming less and less valuable. This is the DXY, and you can see that over here as well, declining since 1986, and you saw it in the previous picture as well. So this is what we call misplaced trust, and this is what we call a bubble. And there are two assets that outperform, that are the Nasdaq. So the mean is the disruptive technology, the Nasdaq, and crypto. These are investments we call future proof because they're investing into the future. And what we most likely going to see happen is people start to realize this, and they start to realize, hey, shit, the investment I currently do is not future proof. It's in a bubble. It's misplaced trust. So I need to move my money from one asset to the other asset. And in the grand scheme of things, you can see that there is a lot of money. Crypto and Bitcoin 1.1 trillion approximately as of November, but the global real estate 220 trillion, the bonds 124 trillion, equities 106 trillion, gold even 10 trillion. So there is a lot of money. And what we call when people are moving from asset to asset is called sector rotations. And sector rotations, just by getting 1% of the global real estate market, you already influx. If that moves to crypto, you already 3x the whole space, and 1% of this is nothing. So people start realizing this, and there's a lot of money. And now we have the urgency clear, so we've cleared out what has been going on behind the scenes in a real short amount of time, because there's a lot. We have a whole economic history that led to the point from World War One to the place where we now in need for a new system. And zooming into what is going on today, we see the metaverse, NFTs, crypto, government stepping in, KPMG putting a percentage of the portfolio into Bitcoin and Ethereum and preaching it to other clients. Countries legalizing it. Everything is happening. It's just a matter of time. And this question is important because if you ask yourself the questions like, if a Samsung or a McDonald's or a Adidas or whatever company is investing a lot of time and money into these industries, especially in the metaverse, won't they have thought it through? And the longer we think about these kind of questions, the lower your return on investment becomes. It's important. So everything has been happening, but we don't see it in the price. And what you need to take in account for is that not everything behind the scenes will always directly be influencing the price. Everything can look good or everything can look bad, but the price can still hover at around the same amount because prices are getting influenced with news, with psychology as well. And that's why we see all these news, for example, right now. But we have the fear plus Russia plus inflation plus Corona, and everything is pushing the price down and people are stepping out of the markets. But we have around behind the scenes, we have all these things happening. So we're going to look at adoption, supply, demand, logarithmic value, and scarcity. And adoption is covered already above. But in the supply side, you can see that supply side with the miners securing the network has been the highest ever it has ever been, and increasing. Even with the China drop, we're banning all the hash rates, the miners, 57%. You can see right now that this the hash rate of the miner is at an all-time high, meaning it's fully functional, it's fully secure, and it's ready to being used. The demand, we are measuring it, the demand in the activity, for example, in the activity or the number of addresses with more than 0 Bitcoin. And you can see that it's been increasing over time and faster and faster and faster. The logarithmic value, basically over time, when you see adoption happening into a chart, then you're aiming to see, you're looking for the logarithmic chart, because the logarithmic chart tells the truth. And we need to have some kind of comparison to Bitcoin. And that's why we zoom into Amazon. You can see Amazon, in the beginning, Amazon was like a bull and bear market cycle as well, with an enormous bull market, bear market, bull market, bear market. But over time, these swings became less and less extravagant. So adoption came in, buyers kept on buying the lower prices and kept on pushing it higher because the stock, in this case, became more valuable. Zooming into Bitcoin, this is what Bitcoin looks like as right now. Bull markets, bear market, bull market, bear markets, but less and less extravagant over time. We're seeing Bitcoin right now in the beginning phase of Amazon. This is what adoption looks like in over time. And we have scarcity. So scarcity is the most important thing, because this is the perfect example. 21 million Bitcoin, 2 million approximately is lost. You have 8 billion people. You divide 19 billion over 19 million over 8 billion. And that leaves you with 0.002 Bitcoin per person. And if people, you see the big investors starting, MicroStrategy, Tesla, the government starting to buy more than 1,000 Bitcoin, scarcity will be there. and is already there. It doesn't have necessarily have a direct impact on the market right now, but when people start realizing this, panic breaks out, and it doesn't really matter anymore when you buy, because you should have a couple. So you just buy and buy and buy because value will rise over time. For us, for you and for me, price really matters because, like I said in the beginning, if you buy at 60K and Bitcoin goes to 120K, you 2x your money. But if you buy it at 30K and it goes to 120K, then you 4x your money. So these certain situations can be really life changing over time. So what you want to do is you want to buy when prices are undervalued. And you can see that, for example, when there is a drop of 50%. So 50% is a good trigger, or at least a big drop is a good trigger to buy step by step and create your average position. But you can also see that on the Unchained data as well, where we look at values that are normally compared to bear markets, for example. You stand to see just the dormancy flow, you can see that we're in a lower bound of the price valuation. You can see the stock to flow model, in which we normally should behave between one or two standard deviations to the top side or to the downside. And you can see right now we're well below what the average adoption rate should give for value to Bitcoin. So to conclude, this is important. Everything is happening. Everything is going on. The scarcity, the demand, supply, the undervaluation, the panic in the world, people stepping in, companies stepping in, the government stepping in, and we only talked about Bitcoin. We can also zoom into the space, but because Bitcoin is not the only thing that is happening, we can see the metaverse, the NFT. So the use cases are expanding and expanding and expanding. It's a whole new world of opportunities. And that's why we created Omnium. And Omnium is going to be the education platform for you to learn about all of this: NFTs, metaverse, crypto trading, how to set up your landscape, whatever, anything you want. We have a whole academy for that is going to drop in March. Besides that, Omnium is a metaverse company with a big city called Cyber City, where you can do everything you want. You can buy NFTs, you can do live sessions, you can live there, you can do everything you want. And that's Omnium. That's why we have it, and that's why we are going to guide you through these developing phases of this new world. Because you need to be on it, or you will drop off forever. So this is the update for today. I see you guys tomorrow.